Hello and welcome to 3.0 TV. I am Vishakha Thakur. Digital assets and stablecoins are driving rapid growth in terms of institutional adoption, cross-border payments, and custody solutions. So as the market expands, security, regulation, and infrastructure have become very critical for banks as well as fintechs. So to shed light on this, we have with us Jason P. Allegrante, Chief Legal and Compliance Officer at Fireblocks, a leading global digital asset infrastructure platform that helps institutions securely custody, transfer, issue, as well as manage cryptocurrencies and stablecoins at scale. So he previously served as senior analyst and special assistant to the VP for bank supervision at the Federal Reserve Bank of New York, founded in 1914. And the bank is responsible for implementing US monetary policy and supervising major banks. Well, Jason's career spans both traditional banking and fintech startups, giving him a unique perspective on custody, stablecoins, and the convergence of finance and technology. So hi, Jason. Welcome to 3.0 TV.
Thanks for having me, and thanks for that introduction.
It's a pleasure to have you with us today. So, Jason, Fireblocks supports more than 2,400 institutions today, and in fact, over 80 banks such as BNY Mellon and Standard Chartered with digital asset custody, payments, stablecoin infrastructure. So, what is the biggest mindset shift you have seen from traditional finance?
So, the first major shift to understand, right, is the shift from physical asset custody to digital asset custody. And you have to understand that when you shift from a physical asset to a digital asset, you need an entirely different way of thinking about the security of the asset. And that's the innovation that Fireblocks had brought to the market, right? It was a digital native way of working with an asset that is itself digitally native. Right. The second shift I would just mention, right, is a shift in the way the market is thinking about this itself. So I think only recently, maybe within the last 3 to 5 years, have we seen institutions that are forward thinking, that want to engage with digital assets, understand this very point. It's very different to hold a physical asset than it is to hold a digital asset. And that's created opportunity for Fireblocks and also competitors of Fireblocks that also offer digital asset services.
So now coming to all the customers, we can talk about the $234 million hack, which WazirX faced, and WazirX integrated Fireblocks for digital asset custody. So what was the onboarding process like? What checks and controls do you require before working with an exchange post-hack? And how does Fireblocks custody model basically reduce future risk?
So one of the really interesting and exciting things about Fireblocks, right, is that it's very, very configurable. It's very versatile. When we have a customer who comes to us, let's say after a loss event, after a hack, something like that, obviously we're delighted to work with that customer. And understanding the particular security needs of the customer, what do they want to achieve? What is it that they want to do? Every customer, of course, wants to secure their own digital assets. None of them want to be hacked. This is kind of the baseline by which we operate. But what's interesting about the Fireblocks service in particular is that we have a model that enables for the configuration and implementation of different layers of security. So a customer can say, for example, every time there's a transfer of 1 million assets or 100 million assets, they want to be alerted about it. They want the chief executive to know about it. They want the CFO to know about it. But let's say you want to be even safer than that. You could then turn that threshold down, and you could say every time there's 100 in digital asset transfers out of the platform, I want the CEO to know about it. I want the CFO to know about it. Now, you can imagine how that might get a little bit difficult to manage on a day-to-day basis if you have a lot of stuff going on. But my point, right, is that you can take the Fireblocks platform and you can calibrate it to where your risk tolerance is. We take a very, very deep interest in loss events. I mean, we are always asking the question within the building, could this customer have avoided the loss situation if it had been using Fireblocks? And if we think the answer is yes, we want to know why. And if we think the answer is no, we also want to know why.
Great. Now, coming to stablecoin market, the stablecoin market has grown from $190 billion in 2024 to over $312 billion today, with daily volumes around $150 billion. So apart from the Genius Act, what have been the key drivers of this growth?
I think the answer is simple in a way, right? And it's that What we are seeing in stablecoins is really the first successful use case at scale of a digital asset application, right? So we have obviously had success of Bitcoin. We've seen success for other asset classes, and we've seen limited success for different use cases. But I think really stablecoins are proving the utility of the blockchain, and they're proving the utility of stablecoin as an asset class.
Right. So, with the US passing the Genius Act, while UK, Hong Kong, India are in process to enter the space, is the US emerging as the global rule setter or the clear winner for stablecoins?
I think this question is so interesting, and it speaks to a number of questions, the nature of the market structure going forward, right? So in the 20th century, we saw the United States come to dominate the global financial markets, and they did it in two ways. One was through the US dollar, which became the dominant currency and also dominant reserve currency across the world. But they also dominated the rails. So they owned the payments rails and the interbank rails and all that sort of thing, in addition to owning the dominant asset class, the US dollar. So with the transition to digital assets and blockchain-based financial system, there was a real opportunity for the rest of the world to say, okay, well, the 20th century, belonged to the United States in that sense anyway. What can we do to move forward? And one of the ways to move forward would have been to move really swiftly in the adoption of blockchain and digital asset-based technology, including stablecoins. Now, what's happened, and this surprised me because I was going around the world and I was encouraging the rest of the world to step up. But what happened and what surprised me was that the United States found consensus around stablecoins. They passed the Genius Act, and in my mind, things have slightly flipped. That's not to say that the opportunity that I saw, a year ago or 2 years ago doesn't still exist. But the United States has again taken, I think, the lead position in a lot of this stuff. So the Genius Act, for whatever else it does, it has clearly unlocked the potential of U.S. financial institutions to be major players in this space. It all remains to be seen what they do, how quickly they do it, and whether they achieve adoption at scale. But they are now in position to do some really interesting things. And I think the Genius Act has put the United States, again, back in a position to be a leader heading into the 21st century in addition to the 20th.
All right. So we know that Tether still controls 60% of the market, but Circle's USDC, PayPal's PYUSD, and some new bank-linked stablecoins are growing fast. So do you expect market share consolidation or fragmentation over the next 2 years?
Again, this is another fantastic question, and I am fascinated with the potential shape of market structure going forward. What I would observe about the way things have been, right, is that USDC has come up in the United States basically in a vacuum of regulation. It's become, in many ways, one of the preferred stablecoins precisely because it has that full US dollar backing. And it's always been kind of within the regulatory perimeter of the United States. I think for some portion of the market that's been attractive. Contrast that to Tether. Mm-hmm. Tether has been incredibly popular and incredibly successful with large parts of the world, right? I could in fact envision a world where, right, Tether continues to hold on to a lot of global market share while we see a big fight for market share with USDC and some of the new issuers that I expect to see. Ultimately, I think just to boil it down, it's a question, do the legacy assets and the legacy asset issuers survive? Do they thrive in this new market? So I think that's really interesting. I think it's going to be really interesting to watch.
Great. So, Jason, here in India, we are seeing crypto adoption spreading rapidly across tier 2, tier 3 cities. So, what one piece of advice would you give the first-time users on choosing a wallet or exchange safely?
There is a new way of securing digital assets. We call it self-custody, you might call it direct custody. But basically, it says that the customer, whether it's a business, whether it's a retail customer, has control over the digital assets. And that's done usually through control through one or more keys that can unlock the wallet and can, enable them to direct the transfer of the digital assets. The other model, which is looks a little bit more like the traditional finance model, and I'm not saying it's good or bad. I'm just saying it looks a little bit like the traditional finance model, but that's what we would call a custodial model. So that's one where you give your digital assets to a third-party service provider. The third-party service provider is in control of your digital assets. I think this is critical because there are different risks at play here. And if you don't understand the risks, again, either as a business or as a consumer, then I believe you are exposed to some risk of loss. Understanding how the security mechanisms work within the whatever service providers you're using, whether it's custodial or non-custodial, this is kind of the next level of sophistication that I would recommend anyone who wants to engage with digital assets understands.
All right. Thank you so much, Raisin, for joining us for this special discussion, and it was wonderful having you with us today.